So on the financial markets, we saw this summer that the Dow Jones reached a new peak in August, reflecting a very strong American economy where GDP is growing quite fast, and when we see the return of inflationary pressure. So the Federal Reserve in the US has been increasing interest rates in recent months, and we believe that this will continue. And at the moment, the strength of the US economy and these higher interest rates are making the US dollar stronger. Now, this has also consequences elsewhere in the world, as those higher yields in American dollars have triggered some capital outflows from the most vulnerable emerging countries. And that's how we saw in this graph this summer the strong depreciation of some of the most vulnerable currencies, like here the Argentinian peso and the Turkish lira. And this brought some volatility back on the financial markets, despite the fact that the levels and the valuations are quite high at the moment. So on the financial markets, we think that volatility will remain for some time, simply because we heard in Jackson Hole that the Federal Reserve still intends to increase interest rates in the coming quarters, which will continue to reinforce the US dollar and the capital outflows from emerging countries. But also because on the European side, we still have some hurdles to overcome before the ECB can start tightening monetary policy in 2019 and reinforce the euro. The main hurdle is, of course, the Brexit negotiations, where we are waiting an agreement before the end of the year. But some parts of this agreement still have to be negotiated, notably on the trade of goods and services. And the second big hurdle will come from the Italian budget, as in Italy we have a new government which had at first spending plans that were very high in terms of the Italian GDP, and so the presentation of the budget for 2019 in October will show how much Italy is ready to play by the European rules, and this could trigger some volatility in the market, as we saw in this graph. The spread or the risk premium that Italy is paying on its debt has already increased in recent months. So this could continue to create volatility in the coming months.